Uh, in the last part of this topic, too, we are focusing on accounting application, and accounting applications are talking about sales tax, property tax, exchange rates, and currency exchange, and invoicing terms of payment and cash. So there is no evidence, there is no avoiding sales tax, property tax, currency exchange, and invoicing. As a consumer, you generally need to pay these costs. As a business, you not only pay these costs, but you need to charge your customers appropriately and collect taxes on behalf of the government. So sales tax, we all know that when you buy things here, we have to pay a general sales tax of a federal government and the provincial sales tax as well. So we have a GST and PST. However, in some provinces in Canada, there is HST, which is what we call it as a harmonized sales tax. That's a combination of a provincial and the federal tax together. So in Alberta, if you buy something, you just need to pay only HST, not the GST or a PST. But here in British Columbia, if you buy, you have to pay GST as and PST. Now, property tax, those who own property here, they have to pay a property tax. And property tax are annually tax paid by real estate owners to local levying authorities to pay for services such as roads, water, sewers, public schools, policing, fire department, and other community services. So every individual and every business pays property tax. Even if you don't own property, you pay property tax that are included in your rental and leasing rate from your landlord. So definitely the landlord is going to adjust somewhere the tax as well as a cost of the house. So house with an assessed value of 375,000 is subject to a tax rate of 1.397645. What is the property tax? So we can simply multiply this with this rate and divide the with the 100. So you can see here 375,000 and multiply it by 1.39765, and then what you get it, you have to divide that with the, so the tax for this property is going to be 5,241.169. If a commercial railway property has a property tax bill of 166,950 and the mill rate is 18.55, what is the assessed value of the property? So the property tax, so here how we calculate it? We calculate it, so here we calculate this multiplied by this divided by 100, so we get this tax value. So if we don't know the value of the house but divide by the property bill, which is 8.5500, and then we multiply it with the 100, is equal to how much? 166.950. This is, so what we can do, we multiply this with this and then divide it with the 100. So we can find out the property price is 166,950 multiply by 18.55, and we get it this, and then you multiply this value with the 100. So the value of this property is going to be 309 692,250. This is the value of this railway property. Now, a residence has a market value of 340,000. The municipality pay tax policy is set at 40%. real estate owners have to pay three separate taxes: the municipality tax, a library tax, and education tax. And these are the rates that you can find it out. So first of all, what we have to do, we have to figure it out here. What is the 70% of this? So what we can get it, that's what we call it as an assessed value. Assessed value. The assessed value is 238,000. Right, this is our assessed value, AV. Now what we have to do, apply this assessed value 3800 into the first one is a tax rate set at this much, this much, and this much. Municipality, like the first one is for municipal tax, M tax, municipality tax. This one multiply by 1.311666 divided by 100. So we get it like how much we are getting, 3121.77. Then we have to apply a library tax, and that is 238,000 into the value of the tax is 0.007 and 383 divided by 100. So we get it like 17.57. And similar to that, because of the space problem, I can write it here as well, like an education tax. And we see here the amount is again 238,000 multiplied by the rate, which is 0.842988, and the divided by 100. So we see here the value is 2006.31. So altogether the property tax is sum of this plus this plus this, which is 5,145.65. That is our property tax in this case. Exchange rates, we know that every day we are dealing with that. You have to convert your currency into Canadian dollar, or Canadian dollar into your currency, because sometimes you are receiving money from your parents, or from your loved ones, or you are making payment to them, your loved ones. So that's the way that exchange rate works. Like when we convert the local currency into any currency, so in simple way, the exchange rate is the price of any currency with respect to your currency. Like if you want to buy a 1 Indian rupee, how much Canadian dollars you have to pay to buy a 1 Indian rupee, that's an exchange rate. Similarly, if you want to buy a Canadian dollar, how much rupee you have to pay to buy a 1 Canadian dollar. So this is what we call it as an exchange rate. Now there are two type of scenarios. One is that a currency is appreciating, and the other one is currency is depreciating. When we are saying currency is appreciating, it means they are getting strengthened, or they are having more value as compared to other currencies. So it's a relative term. When we are saying the currency is appreciating, so definitely the other currency is going to be depreciating, weakening, or losing value. So that's the way we talk. The currency is appreciating when they are getting strength, or they are getting high value. When the currency is losing value or weakening, then we call it as a depreciating. So here is an example, like if the exchange rate is 97.3422 per Canadian dollar, we can get it one in a 1 Canadian dollar, 97.3422 Japanese yen. So what is an exchange rate for Canadian dollars per Japanese yen? So it's very simple. We divide this with 97.3422, and we get it the value, which is 0.010273 Canadian dollars. Like in 1 yen, you can buy this much of Canadian dollars. The last thing we are discussing here, what we are discussing here is invoicing and terms of payment and cash discounts. So invoicing is a bill you want to send to your customers, like after providing the services or the goods to your customer, you bill them, and this billing is called as invoicing. So invoicing does commonly occurs at a consumer level on credit card transactions, along with many services where the business may not be able to access the exact amount of the bill at the time of the transaction or until the service is delivered. So here is an example, like you receive an invoice for 35,545.50 dated August 14. The term of the payments are listed as 3 by 10, 2 by 20, or net 45 EOM. The accounting department is considered paying this debt on one of the 3 days. Determine the full amount of required if the payment is received by the invoicing company on each of the following dates. So this is the way that we can calculate invoicing prices. Invoicing, because in invoicing there is a possibility that we, in order to get a benefit of early receiving of the money, we give them a discount. And here the case what we are discussing here, that we want to give them a discount of a 3% if we make payment in 10 days or receive payment in 10 days. 2% discount if the payment is within 20 days, and there is no discount if you have to pay within 40 days, so 45 days. So it means that there are three options available, that either you can pay within 10 days, get a 3% discount, or you have to pay within 20 days and get a discount of 2%, or you can pay on the 45th day or within a 45 days without any discount. So we can see here that if we want to make payment on September 3rd, so the invoicing date is 14th. So 14th means that we are not going to avail this 3% discount, as the invoicing date is invoicing date is if we are paying on September 3rd, so it means 14th is not counting. So we started from 15th of August. So we are not able to get the discount of the September 3, because it's out of 10 days. But it is within a 2 days, a 2% discount of a 20 days, because 20 days is going to be happen on 4th of September. So what will be the value? Okay, so there is a one catch in it. It's an end of month term. So we're gonna start counting days after August, means we will start it from the 1st September. So if we are starting end of month term, if there is an end of month condition applies, so in this case we're gonna get it a 10% 3% discount. So on, if we make a payment on September 3rd, so we will get a 3% discount on it. So we can calculate it like 35. Do we have space? No. So we can say, like in case of A, we can apply 35,545 into 0.03. That is going to be the discount amount. And finally we are going to pay, if we want to calculate the discount amount, so 35545 into 0.03, so discount amount is 1066.35. So ultimately how much we have to pay? We have to pay 34,478.65. So this is going to be the amount in case we are paying on September 3rd. If we are paying on September 19, so we have to pay we can get a 2% discount, and the value we're gonna get it, we can apply this formula like as 35,545 into 1 minus 0.0. So you can get it the value which is 34,834.59. So this is the amount we're gonna get. This one is for with 3% discount. This one is for 2% discount, and the third payment is out of this period of 20 days. So there is no discount. So we have to make a full payment of 35,545.50. So it's a 50 as well. So you see, this is all invoice, and this is what I want to discuss on the topic 2. So we discussed a lot of things: percentages, ratios, proportions, rate of change. We talk about indices, taxes, gross salaries, and exchange rate, and finally we also talk about the invoices. So thank you very much.